It's your Forex mentor, Siyabonga Forex lover here. I'm kidding, guys. That's why I'm laughing. I'm not your mentor. I'm just an ordinary guy who loves trading, as my name is saying that I'm a Forex lover. I love sharing proven and working strategies with you, and I hope you will enjoy it. And if this is your first time, please make sure that you subscribe, turn on the bell for the notification so that you can get notified every time I release a new video. Okay, in today's video, I just want to share with you on this, using this demo account, how do you use moving averages in your strategy, or how can you add moving average to your strategy. Basically I will show you ways that you can use moving average, and also at the end of this video I'm gonna make sure that I'm gonna take at least one trade with this strategy that I'm gonna share with you now. And I'm so excited, guys, because what I'll do after taking the entry, I'll make sure that I pause the video and come back when the trade is actually in a loss or is actually in a profit. But that's something that I will do at the end of this video, guys. Okay, guys, what are moving averages? Moving averages are the averages of prices that are measured using two moving lines, which we are calling moving averages. Okay, that's off the top of my head. This is not something that I took like directly word for word from the book, but actually moving averages, those two lines which are calculated on the past, meaning moving averages are lagging indicators. They are not lead the price. They are not leading indicators. That's what I actually wanted to actually say. Okay, guys, let's get straight to it. First of all, if you don't know how to add how to add moving averages, let us start with a blank chart here. Let's remove this one. It was for another strategy. Okay, you come here, insert, you come here to indicators, moving average. Okay, for today's video we're gonna use the 50 and the 20 moving average, or even the 21 days moving averages, and we're gonna use moving average that is called MA type, called exponential, and then we're gonna apply it to the close, and then we're gonna do our first moving averages. Let's do the 21 instead of the 20. Then we're gonna go to the trend moving average. Let's do the 21 and then just change the color maybe to purple. Let's see how it's gonna look. I think let me just increase the width of this moving average a little bit so that we can see them more clearly. Okay, guys, basically what you do here on this strategy, you just looking to buy when the fast moving average cross the slow moving average. I know you're gonna ask yourself, what is a fast and a slow moving average? A slow moving average is the one with a longer period of time. For example, a slower moving average in this case is the 50 moving average, and then a faster moving average is the 21 moving average. So basically this thing, if we are on the 1 hour, it means the 50 moving average is the past 50 candles. It's calculating from the past 50 candles. Then if it's the 4 hours, it's calculating from the past 21 4-hour candles. I hope you understand and get what I mean. Okay, guys, so To buy here, it means the purple must be above the blue moving average to buy, in order for us to buy this currency. And that's simple as that, guys. But I must say, moving average on their own are not working best. What do I mean when I say that? Okay, what I'm trying to say is, it's not enough for this purple moving average to cross above this blue moving average, and then like you just buy instantly. What you can do is, you can then, like, just for instance, let's make an example. Let's just try to get a little bit backwards. Let's make an example in this case. In this case, actually not there exactly. There. This is in this candle. This is a candle that after the close of that candle, that is the candle whereby you could have looked to sell on. Underline, guys, I'm saying look to sell, looking to sell. I'm not saying sell instantly after that candle close. I'm saying you look to sell. Okay, in this case, what we're gonna do after this candle close, underline, must make sure that you wait for the candle to close, and then after this candle closed, let me mark it with a vertical line there. After this candle close, sorry, actually this is the one that we can take it as a move the candle, this is the point, exact point whereby the moving average crossed it. Né? Let's agree on that. Okay, what you do after this happen, you don't sell immediately. So my tip for the day, something that you can do, you can switch to the 4 hour. So if you're gonna trade the moving average, first of all, where's my thingy? Okay, if you're gonna trade this okay, so if you're gonna trade with this strategy, what you have to be aware of, first of thing is higher, let's do it, higher time frame trend. If you're gonna trade this strategy, you must make sure that you know the higher time frame trend. What else do you want to know? You want to know the position of EMAs on time frame above. I want to know the position of the moving average on the time frame above the current time frame that you want to use the moving average on. And that's basically the two things that I want to highlight most. Then I'm going to add as we go. I hope you have noted, guys. So let's switch to the 4 hour and go back there. Can you see? Can you see, guys? So this could have been a good sell because on the 4 hour, as you can see, the purple moving average, which is the faster moving average, at that time it was crossing below the slower moving average, which is the 50, and even here it's kind of below the 50. So what you want to note on this higher time frame, which is the higher time frame of the 1 hour, you want to make sure that where's my thing here? You want to make sure, okay, what can you use to confirm that now yes, you can take this trade? Make sure there is a recent, make sure that there is a recent strong rejection of higher prices for sales. So if you're gonna sell this pair, you wanna make sure that there's something like this, a strong rejection of higher prices on the candles to the left, of where you're gonna sell, which means here, it can be here, it can be here, it can be here, it can be there. Make sure that there is a strong rejection, because that strong rejection is showing that the sellers, the buyers were strongly rejected. The buyers were strongly rejected by the sellers. Now they are preparing to take price to the downside. So what you can do in this case, another thing that you want to make sure that you have before you can sell on the 1 hour, make sure, let's do another one. Make sure on this time frame, which is the 4 hour, make sure that there is a double top when you look left. Okay, so if we're looking from this line where the moving average crossed on the 1 hour, you want to look left to see if there's a double top. Okay, let me emphasize this. This is more applicable to a trend that has recently changed from an uptrend to a downtrend. Otherwise, if this was a longer, or if this was a downtrend that has been going on for like 3 to 5 days, if this was a trend that has been going for like 3 to 5 days, then there is no need for you to look for strong rejection of higher prices for a sell and strong rejection of lower prices for a buy. So you could have only apply what I'm gonna share with you with part 2 of this video. I'm gonna share more on how you can use this strategy. So you're gonna look for those two things. I can also add, if I was not lazy to write, I can also add something like a triple top and a head and shoulder. Let me just do it for the sake of you guys. Another thing that you want to look for is a triple top and head and shoulder pattern. So if you are new to this, guys, some of you might not be aware of what is a double top, what is a head and shoulder pattern. Don't worry, on the future videos I'm gonna create content concerning these so-called topics. 1, 2, 3. Make sure that you consider these three things before you can look to buy or sell when there's a crossover on the 1 hour. This is also applicable when you're gonna trade the what's it, the 4 hour, when you're gonna trade the daily if you are a swing trader, or even the 15-minute time frame if you are a scalper. So guys, I think that's all I want to share concerning this example. So now I think let us just go straight and look for a trade using this strategy. I'm going to look for a buy or even a sell trade using this strategy that I just taught you. And then after I got an entry, what I will do, I will make sure that I pause the video and come back when the trade is in profit, maybe by 10 to, actually from 20 to 30 pips. That's where I'll come back and show you the results of this strategy. So for now, let's just go straight to look for the trade. Let's look for a trade entry, my friends. I'll capture this screen now from my thumbnail. Okay, let's delete everything here, and then let's do what? Let's save this template. I'm gonna name it video because I just did it. I want to know when did I create it. I'm gonna name it video. Okay, let's go to the 1 hour. Is there a trade here? No, yet, not yet. I don't see any rejection from here. Let's go to the 4 hour. Is there any buys? No trade here. Let's go here on this one, CHF. I named it video, CHF JPY. Actually here, what's interesting is this strong rejection here. It's what is catching my eye now. But the moving average I already have crossed it. But let me just go to the daily. Is gonna be my higher time frame. So I'm not gonna be taking this sell here because I'll be selling to this 2 moving average. That's what I wanted you to note and be aware of. I see there's a strong rejection, which is potential of this continuing down. But if I'm using this strategy, it means from here this price can turn and still go up. But now using this 2 move average for trend analysis, this trend is still up, so I can't be selling on the 4 hour when it is still the uptrend. So this is also touching on that multiple time frame analysis that I have taught you. But if I use this one, it's starting to cross now, meaning if I wait for this candle to close, I can actually take this trade because there's been a recent strong rejection of higher prices. So I'm gonna take this trade I know from the daily is an uptrend, but I can take my trade up until these lows or here these lows. So let me count now if I can get like how many after this candle close at 20 pips here. Okay, yeah, I can still get 20 pips to 30 pips. Okay guys, I'm gonna pause the video now. I'm gonna come back when this candle have closed. If it closes like this with a rejection of higher prices, that's more beautiful because I'm gonna execute and then put my stop loss above this candle, execute here, aiming here or aiming here. Okay guys, until next time. Okay everyone, I'm back because the candle that we are waiting for is closed now. Let me emphasize another thing before I take this trade. there is a bearish engulfing here, which adds confidence to this trade. Also, this candle, or these two last candles before I'm taking, they have broke these two candles, which is this bearish engulfing and this one, they have sort of break this previous low. So I can take this previous low as broken. So what I'm gonna do now, I'm gonna execute my sell. I'll use 0.03 for this account, or let me use 0.04, and then drag this thing and put my stop loss here, 17 pips, and I'll drag it and put my profit here around here, which is 40 pips. The risk reward ratio of this trade is 1 to 2, around 1 to 2. So now I'm gonna pause the video, my friends. I'll come back again exactly when the take profit or the stop loss is hit. Okay guys, we're back again in this trade. It's been after 2 candles, my stop loss was hit, and I hope you guys will understand and actually see why did this trade lose, because I already see the reason why. Because if you still remember, I said that this market is in an uptrend on the daily time frame. So here the market came aggressively, the sellers came aggressively, but if these sellers that were coming here, especially after this candle, what do we expect after that candle? Anyone, even the banks, hedge funds, any trader expecting the market to continue going down. So a lesson of this, instead of the market to go down, it retraced and went up, meaning that there are people, there are buyers here, or there are orders of the buyers here. So even though this market had this bearish engulfing candle, which signals strong move to the downside, after this, the following candle actually closed as an indecision candle. So my advice for this video, I advise each and every one of us to pay a special attention to candlestick analysis, because this candle, even though this one, it's a bearish engulfing, but the following candle was an indecision because it had wicks on both sides of the market. So what does that tell us? It tells us the sellers who were selling here, even if it was a Bank of America, Bank of England, or traders around the country, they closed with indecision, which means they said, know what, they have not decided to push the market to the downside. Indecision means the market is temporarily on a pause, or it's a signal of a reversal. So even if it shows the sellers here, but the following candle showed us signal of the buyers, this candle right here. So that's why this market is going up. So now it's probably gonna come all the way from here. If I like, I can enter this trade and show you and recover my money. Let me enter. Okay, let me just leave it because I don't want to make a too long video. So let me just leave it here, guys. I'll see you on part 2 of this video. Please make sure you like, comment, share, and subscribe. See you next time, guys. Take care. Happy trading.